Hi, I'm Kate from What Mortgage, and I'm joined today by Paul Broadhead from the Building Societies Association, who is going to give us some tips for first-time buyers. Hello Paul, welcome.
Morning.
First-time buyers are facing some really big challenges now. They've always faced challenges, but they're even bigger now. Do you want to just talk to us a little bit about some of the difficulties that first-time buyers are facing at the moment?
Yeah, I think for a first-time buyer, buying a house is expensive, probably as expensive as it has been for about 70 years now. And that's not only buying a home, that's also owning the home as well. So you've got that kind of double whammy where you've got interest rates that have recently increased, yet house prices are also very, very high in relation to people's earnings. So historically, the biggest challenge for people has been raising the deposit that they need to get that mortgage. And that's been particularly challenging if you're renting, because many more young people are renting now than were perhaps 20 or 30 years ago. The size of the private rented sector has grown immensely. So if you're paying rent, to actually find time to find the ability to put some money away and save for that deposit has been really challenging. The other thing that we've seen more recently is people saying the biggest barrier now is actually affording that mortgage payment since interest rates have gone high. So again, owning the home and paying those mortgage payments are quite challenging for people, particularly in a cost of living crisis when everything else has gone up as well. So it has always been challenging. It is more challenging at the moment, but people shouldn't despair as long as they prepare and understand what their expectations are and whether they're realistic expectations, then the market is going to be there and open to support them.
And there are schemes out there, aren't there, that can help, or that some first-time buyers might be able to tap into. Can you sort of give us a bit of a rundown of what's available?
Yeah, sure. So you've got a whole range of government schemes that look at things like shared ownership, often referred to as part buy, part own. So you own a proportion of your home and you pay rent to a housing association on the remainder. That gets you that foot on the ladder. And importantly for many people, it also gets you the security of tenure, that you're not having to renew every year with your tenancy agreement or if your landlord chooses to sell. So it gives you that security of tenure. We've had the Help to Buy equity loan that helps many people over a number of years, which has just come to an end. We've got the government has a first home scheme where you have a discount on a market sale if you're a first time buyer. So that's worth looking at as well. And there's a range of other affordable home programmes around the country dependent on your circumstances. So it's always worth checking out either your local authority website or the government website, or speaking to a mortgage broker is probably the most simple way of doing that to understand what's available to you. The other thing is we're starting to see much more innovation in the market from building societies. So people often say to me, I can afford my rent, my mortgage is going to be cheaper, why can't I get a mortgage? Well, often that's about the deposit, and it's also about mortgage regulation, setting out how lenders can assess whether or not you can afford a home, which is very different than how a landlord would assess that. We've seen Skipton Building Society recently launch a product called a track record mortgage, where actually if you've paid your rent for a period of time, they'll give you a mortgage at that same payment. So that's worth looking into. Cambridge Building Society have a scheme called Rent to Home, where you can rent a property from them for 3 years and then have that money back as a deposit to purchase your home. So there's a whole range of innovation going on right across the building society sector. But again, to navigate that, really important to speak to a mortgage broker and explain your circumstances.
Yeah, because it's all about affordability, isn't it? And how much money you've got coming into your bank account, going out of your bank account. What things can first-time buyers do? If they're saving for a deposit or thinking of saving for a deposit to really get themselves ready for that mortgage application.
So I think, the first thing to do is spring clean your finances. And actually that's a good tip to do every single year. Make sure you're not paying direct debits that you're not using. If you've got something on your phone, an app or a website or something that you don't use anymore, make sure you're not paying that out. Make sure if you're planning to take out a mortgage, you're not taking out other large credit commitments, because when you go and see a mortgage lender and a mortgage broker, they will have a look at what your, again, jargon, net disposable income is, which is basically, once you've paid all of your bills, how much have you got left? Because clearly you can't pay any more than that on a mortgage. So again, don't take any further credit out needlessly, because that is going to affect the amount that you can borrow. I think start by having a look on a number of websites and just putting in your income, what your current credit commitments are, and have an idea about how much you can borrow. See whether that tallies with the type of property that you want to purchase, and then you'll see the gap between how much you save for a deposit. So it's about managing your finances as well. One of the things that comes up more and more often nowadays is lenders will often want to see your last few months' bank statements. So things like, not making, gambling websites doesn't go down particularly well. If you've gone out for a meal with friends and say, I'll put £25 towards my meal in your account, and somebody might, as a little bit of a joke, says this is for something that might be inappropriate, that's not going to look great as well. So just make sure you're managing those finances as if other people are looking at them.
Is it a good idea maybe not to make any really big purchases, or is it big holidays or things like that, or is that okay?
I think that's absolutely okay. It's about the credit. So actually, if you've saved up for your annual holiday, then take your annual holiday. I mean, you will make your own value equation, if you like, if you're looking at buying a home, about if I've saved up £2,000, shall I spend that on a summer holiday, or shall I keep that for my deposit? But if you've saved the money, it's your money. There's nothing to stop you from spending it. It just will affect the deposit that you've got. It won't affect your ability to get a mortgage.
Because I think a lot of first-time buyers are quite sort of nervous about, their bank statement being scrutinised, aren't they? And so it's not going to be good, that much kind of detail. It's more about the credit arrangements that you've got and whether you're paying things off effectively.
Yes, so it's exactly that. So it's first of all, what are the bills that you have to pay? If you're renting, your council tax, your mobile phone, whatever it might be. What are the bills that are your living costs, again, your energy bills and all the rest of it, and then how much do you think spend on food, entertainment, social, and all the rest of it? Everybody wants to have a social life. Nobody wants to buy the biggest house on the street and be sat in it and not being able to afford to go out. So lenders recognise that people are going to live. It's how you manage those commitments and where you prioritise. It's really, really important.
And another question I've got is around credit scores. Obviously, it's a good idea, it's better to have a good credit score if you're applying for a mortgage. But first of all, is it going to impact your credit score if you check it yourself before you apply? And what can you do if you check it and it's not in a great shape?
So first of all, no, it won't affect you at all if you check your credit score. And quite often, it will only be if you make a purchase, if you take out a loan, or anything like that. So what the credit score will show to a lender is, one, what that credit commitment relates to. So it might be revolving credit, so it might be a mobile phone bill, or it might be a credit card. And what the lender will look at is, okay, if you've got a credit limit of, say, for argument's sake, £2,000 on your credit card, and you're maxing that out to £1,900 every month, then you've got nowhere else to go from that. If you've got that credit limit of £2,000 and you're using that for your food shops, maybe you get points or air miles and pay that off in full at the end of the month. That's really, really good demonstration that you're utilising credit in a good way. And what lenders are interested in is two things, quite simply. Do you have the ability to pay your mortgage? And are you likely to pay it? So the ability is, can you afford it? Are you likely to pay it? Is that credit history? So think of it in those terms.
And you work for the Building Societies Association. Can you give us any sort of inside info on what the building societies like to see in their first-time buyer applicants? Is there something that first-time buyers can do to make themselves, even more have even more chance of being able to take out a mortgage?
I think simply it's about managing your finances, because if you're a good credit bet, then a lender wants to lend to people that are going to repay that loan. The difference with the building society sector, I think, than some of the high street banks, if you like, is they can be much more flexible because of the way they underwrite. So if you've got circumstances that are slightly different, you'll get the opportunity to have a conversation and explain that. Whereas if you have this computer says no approach, then often people just fall out of that. So I don't think there's anything different that building societies look for, but they're looking at you as a kind of long-term customer. Let's not forget that building societies serve 26 million customers in the UK. Actually, those customers own those building societies, so they want that long-term relationship and they want people to be with them for a long period of time, so they're there to support them. And
one question about saving as a first-time buyer. Where would you recommend people who are saving for their first home put their money?
It depends on your circumstances. So there's the lifetime ISA, which of course you get a government bonus, which effectively is free money. At the end of the year, you can take one of those out if you're under 40, as long as you use that either for income in retirement or as a deposit to buy your first home. If you don't know whether you're going to use for that, then consider, because you will lose some of your own money if that's not what it's utilised for. Other than that, using ISAs generally or savings account, everybody now has a personal savings allowance. So actually, if you are not going to be paying income tax on those savings, then look for the best rate on the market. If you are going to be paying income tax on those savings, then make sure you look at the ISA market. So, but just save that and make it, the one thing that I always think is it's better to have something set up on a standing order so it goes into that savings account automatically, because you can't then use it.
Yeah, that's really good advice. And have you got, just to end, have you got one tip that you would give anybody who's watching this that they can just take away and maybe put into action as soon as possible to help them with their finances?
I think the one tip that resonates with me is pay yourself first. You know, you work all of these hours, you work for many, many years, then make sure you've got some money at the end of it before you start paying everybody else. And it comes back to that, if you're in a position where you're just starting your working life, then actually if you can automatically save 20p in every pound that you earn, you're going to be paying that in a tax for a few years, so let's get used to doing that. If you can only save 5p in every pound that you earn, start to do that, because that will build up. I mean, there's three things I think that relate to happiness in life: wellness, well-being. So well-being is your mental health, wellness is your physical health. You don't only go to a gym when you're injured. So actually, why would you only worry about spending money when you need to spend it? So get that in early and create that savings habit that's going to endure and put you in a great position.
Pay yourself. Brilliant advice. Thank you, Paul, for joining us today.
Thank you, Kate.